everybody, Tim Joy here, your real estate agent for Bellevue, Eastside, and the greater Seattle area. It's November 2025, so let's catch up on the latest in the local housing market, where I see things are heading this month, and how you can be prepared. Here's a quick recap of what happened in October 2025, according to the Northwest Multiple Listing Service. Median close price came in at $640,000, a slight increase from September's $630,000 and a 1.5% decrease from 12 months ago. Median sales price for new constructions came in at $757,000, and that's an increase from last month's $739,000 and a 1% increase from last October. For new listings, we added about 8,000 new listings, and that's a decrease from September's 9,000 and a 3.4% increase from 12 months ago. For total available inventory, we're looking at about 19,000. That's a slight drop from September's 20,000 total listings and a 27% increase year over year. As for pending listings, we had about 6,700 residential and condo listings that went pending. It dropped from September's 7,300 and a 6.4% decrease from a year ago. For month of inventory, we're looking at how long it takes to sell every home that is active in the MLS inventory. 3.02 months. That's how long, and that's a slight decrease from September 3.25 months and a 32.3% increase over 12 months ago. A neutral market should have 4 to 6 months of inventory. So that's the market update. What do all these numbers mean? Where is the market heading to? Before we start, full disclaimer, these are just my personal opinions and not financial advice. With that out of the way, let's get into what's going on with the market. The latest MLS data shows 3 major shifts. First, mortgage rates are easing, with the 30-year fixed dropping to about 6.17%, the lowest in over a year. Second, inventory is up 27% year over year, giving buyers more options than last fall. And third, closed sales and median prices are down slightly compared to last year's sales, off by roughly 4%, and median prices down about 1.5%. Month to month, both sales and prices ticked up modestly from September, hinting at possible early stabilization. Of course, 1 month of improvement doesn't guarantee full turnaround, and buyers are still navigating affordability challenges. But lower rates and more inventory are reshaping the landscape. Over the next 2 to 4 months, I expect rates to continue a gradual downward trend, potentially edging into the 5%, high 5% range. Inventory will likely remain elevated, giving buyers more choices, while sales volumes may stay steady or rise slightly. Median prices should hold relatively stable, with minor fluctuations depending on neighborhood and price point. In terms of what all these means for sellers and buyers, well, for sellers, the rise in inventory means more competition. So pricing and presentation will matter more. But easing rates may bring more buyers back into the market. And for buyers, more listings and slightly lower rates means more negotiating room and less pressure. But well-priced homes will still move quickly. And if you're thinking about making a move, whether buying or selling, let's connect. I love to put my experience in the Seattle area market to work for you and guide you through the opportunities we're seeing right now. That's all for now. If you enjoyed this update, please hit that thumbs up, subscribe, ring that notification bell, and share. Good luck out there, and I'll see you next time.